Before we sit, actually, Mukhtar, do you want to join us in the middle here? I'm joined by Mukhtar and Christine. As some others have said, we have a fabulous program with all of our bios, so I won't repeat it. Big thanks to Gordon and Jesse and Caroline and everyone who's brought us here, and a big shout out to Dave for doing such fantastic curation of all the content. We are hoping to use this as an opportunity to provoke, to raise questions, and to share some insights, but we're not going to do an in-depth discussion of the underpinnings of digital finance. We did, however, with a little bit of cracking of whip, write a 3-part series on what we're discussing, and you can find those on the Meeting of the Minds blog. So, as Gordon said, I'm part of THNK. I head up the faculty there. It's a school of creative leadership, and we do things differently. So I need you all please to stand before we get going. It's probably, everyone needs a 7th inning stretch anyways. So, all right, you're gonna raise your hand, your right hand ideally, and as if your finger were a pencil, you are going to draw a clockwise circle on the ceiling. So on the ceiling, so keep your finger pointing up, exactly, good, no one's doing this, right? On the ceiling, okay, and then slowly lower your hand down, still drawing on the ceiling, down to below your belly button, and someone tell me what direction that's going now. Counterclockwise, right? Did any of you change directions? You should have been going clockwise. Those of you from Europe, it's anti-clockwise, right? All right, okay, you can have a seat. That is an exercise, a simple exercise. We do a lot of experiential work at THNK to try to embody the points that we make about these big abstract concepts. And that one has to do with perspective. So what we're hoping to do here is introduce some different perspective to how you think about things like digital finance, fintech, so that you leave understanding that it's more than Bitcoin. So before we get going, just very briefly, how many of you have done any online banking? Please raise your hand. Okay. How many of you have transferred money to someone you know using PayPal or some other system? Okay. How many of you have used the blockchain? Okay, a lot less. Well, we are very lucky to be here joined by Christine, who is one of the co-founders of the Digital Finance Institute. And rather than doing our bios outright, I would just love to hear a little bit about how you went from being a barrister to being on the front lines of Bitcoin and the blockchain.
Keep it short. So in my life, my private practice life, I do a lot of anti-money laundering and counter-terrorist financing law, which is a pretty specific specialty. And I guess about 2 years ago, kind of what was happening in the Middle East was at the forefront of what I was doing with the banking industry. And I began to realize, which is in the news a lot, the refugee crisis, which was back then not a big item and not on anyone's radar. And what was happening is, as that terrorism crisis was heating up, of course, it was generating more and more refugees and a huge migrant crisis. So part of what happens in my world is, as you regulate the banking industry, we create this thing called financial exclusion, where people can't get bank accounts because the anti-money laundering laws are quite onerous. So we were getting a huge, millions of people that were moving into different countries without bank accounts, that were financially excluded overnight. And so I thought it would be a good way if we could think about things like the blockchain, Bitcoin, and even just refugee payment systems to bring all those people back onto the financial system because they were financially excluded. So I realized that the only way to really get that moving would be to have some sort of a think tank where we could bring all those issues together, just deal with fintech in a really discrete way of financial inclusion and the refugee crisis. So the think tank was born out of that idea.
All right, fantastic. And Mukhtar, we are lucky to have Mukhtar here, who oversees the housing crisis, as well as the housing opportunities in Vancouver as the Chief Housing Officer. What I'm curious about, though, is you moved from London to Vancouver to help shape this policy. What drew you from such an exciting market in London to Vancouver?
Yeah, I mean, worked in London for about 25 years, and what I saw there over that period of time is that apart from the ripples you get in terms of geographical increase in affordability or the decrease in affordability as property prices rise from the centre and flow out, we were also seeing a ripple effect in income ranges as well. So it wasn't just people on low and no incomes that were being affected, we were seeing people on moderate and middle incomes being affected as prices were increasing. And that wasn't just in London, we're starting to see that across the world. My last 5 years in London, I was working for a property consultancy which was international, so we were seeing that urbanization of cities having a big impact in terms of affordability, as well as globalization as well, not just around people moving, but global flows of money also impacting on some of the major cities across the world. So one of the things I was looking for at my stage of the career was really to see how I could develop and share that experience I've learned in London, in other cities across the world. Vancouver's got a very similar characteristic in terms of the need for affordability. It's a global city. It has an inflow of money going into the city, and you have local people competing against a global market. And finding policies and opportunities to create affordable housing was really a challenge, which I was really keen to take on.
Great, thank you. Well, so we find ourselves here together on this stage after spending more than 6 months working very closely together at THNK on one of the innovation challenges. I've described that more fully, it's in the annual, but in short, we decided to look at the future of capitalism. As we're looking at and considering everything from resilient human habitation to how we make our planet more prosperous, this is really the underpinning of our systems and interweaves with so many of the decisions we make in cities. So the way that we do challenges at THNK, we spend 6 months with a cohort of about 30 international, mid-career, average age 40, fantastic thinkers from industry, from commercial entrepreneurship, social entrepreneurship, NGOs, and the city. And we work together to come up with new solutions that completely reframe how we've approached entrenched problems. So I see that my typeface is defaulted, design snob that I am, but this is the question we tackled. And as you get a sense from my two very experienced, deeply knowledgeable panelists, we bring in innovation partners like these to work with our participants who come from across a range of sectors very purposefully to bring diverse points of view to bear. So we tackled something that was pretty meaty, looking at how digital finance models, which could include alternative and community currencies, it could include existing things like Bitcoin, and it could include token systems, to look at diversifying access to low carbon affordable housing. So what we want to do is spend a little bit of time using some of the examples that came out of this process to touch on some of the major themes. This is the first time we're sharing them publicly. We'll be publishing a report shortly. So I do want to be respectful to our participants as these are in all different stages. But the first example was something called Positive Access Link, otherwise known as PAL. And this built on a very successful program in the downtown east side of Vancouver, which some of you may know is the largest open-air drug market in North America. It has a pervasive, entrenched problem with marginalized populations, and some say $1 million of money goes into the downtown east side every day from a mix of government support and other social services. So an entrepreneur who is in our program owns a diner in the downtown east side, and they have a very successful physical token that gets sold and is redeemable on the streets at the diner for a healthy sandwich. And what that is a controlled currency that means when you give that token, it has no value in the drug system other than what it was intended for. And out of that grew this idea of making a digital version of this available on a mobile phone so that people in need could get better access to food, housing, and medical services as needed, and that we could also get better information about where to direct some of those municipal dollars over time. So what I wanted to ask as a first question is the idea of controlled currency, where it's only relevant or redeemable for the intended use. How does that play nicely, perhaps, with the city, introducing a new kind of digital currency where we've heard many different cities and nations are considering their own forms of digital or complementary currency?
Yeah, I mean, we were really interested in working with THNK because one of the things that we wanted to do was release the creativity that we have in the city. Really bring in new ideas in terms of how we could face the affordability challenge. And you saw the title was thinking, how do you get digital finance and low carbon affordable housing? And what came out was these great ideas which affect housing in different ways. What we saw with this particular process was this idea was the fact that by enabling people to increase their incomes, and what we saw in the downtown east side particularly, these are people that may never get a job, a proper job as defined in the way that we would expect them to, but they contribute towards the local community in lots of different ways, by volunteerism, by other ways in which they make that community work in terms of an engagement. And what we saw there was that this was an opportunity using currency, alternative forms of currency, to maybe monetize that social value and commitment that people put into that community, and therefore find a way of using that as an opportunity to then add access housing, access services, but it allows people to lift up from that basic level of poverty. So having that kind of currency really enabled us to apply that to our Healthy City strategy in terms of improving people's health and wellness and incomes, as well as the access to affordable housing. But also the model also accesses the services and the businesses that bring this into the, if they tie themselves up into this kind of currencies, to look at how you can really engage with the whole community to circulate a currency that can then develop in terms of an approach, which was really helpful from our point of view.
Great, thank you, Mukhtar. One of the things that rises out of that, as we were chatting before, there's all kinds of groups offering new currencies. Christine asked me not to mention it, not really, but ISIS has just issued a physical currency. I don't know if those of you are following that news. But there's this question of how do you introduce currencies at a city level, and what does that do? And in Quebec, there is a town that has decided to start tearing their paper bills in half. And they affectionately call them demis, so half in French, and half of a 20 is a 10. And you would think, why do you do this? But what the goal is that local businesses have agreed to redeem for that value. So half a 20 is $10, but it's only redeemable at a local business. So you're now driving and keeping income within a city. And the question is, how does that impact adoption, upward mobility? Is this helpful? So if we were to introduce something like this, where you now have a somewhat siloed currency, where's the positive? How does it work? What should we watch out for?
Well, I can give you a real life example. In Afghanistan, for example, that's a place where women, typically cannot have bank accounts, can't do financing, can't own money, have very few rights. And so there's a woman who's a refugee from Iran who is originally from Afghanistan and moved back there and set up a really successful little company where they teach girls how to code to try to bring them into the formal education system a bit better. And she couldn't get any funding into Iran and couldn't move money back and forth to start her program, so she looked at Bitcoin as a way that she could bring money from the United States, where she is now, and to help set up this system. And now in Afghanistan, there's this really cool digital currency, Bitcoin, growing by leaps and bounds there as a way to support local enterprise, startups. And so I think that's a really great example that, for example, could be used in Vancouver as well, or really anywhere where you have financial system problems. You can look to something like an alternative currency that helps you move the market in some way. There are some risks, obviously, with some digital currencies, because they don't go through the banking system. It's sort of a machine-to-machine payment system. And so the risk is, of course, financial crime, that you can move money to places where you're not supposed to. You can circumvent sanctions. It's a great way to move money if you're a criminal organization, but those are low risks compared to the benefits of actually being able to have a currency that is really monitorable, because it's on the blockchain and because all of the transactions are transparent and you can trace them from one entity to the other. So I think it's a great use of financial technology and going forward with the way we might want to see the monetary system. Perhaps not take over our money system, but have it as an aside way of moving money and controlling the financial system. Yeah.
And that's of course why sometimes there are a lot of names for what's happening. These can be known as complementary currencies. Yeah. And I think one of the big benefits for us and for our entrepreneurs is that the city has been really active in wanting to be involved in this, so that as things develop, it comes out of collaboration. Mm-hmm.
Yeah, I mean, I think what we saw through the process, working with the different ideas, this was just one of those, but you've got, we'll speak about some of these others, but where you can actually quantify the benefit that people have. So whether it's renters that are saving energy costs, whether it's homeowners that are leasing their land for development so that you can rent that at lower cost, you can recognize that with alternative currencies. So we saw that there was a bigger picture here that we could maybe create by having a complementary currency.
Yeah,
I was going to say as well, some of the benefits too when you move digital is you can in fact trace the payment, the decisions people make for the money they get. Like they noticed that in Lebanon, again in the refugee crisis, where they went to digital payments instead of handing out cash, and they monitored where those debit cards were used, and they found that you might think refugees might be buying alcohol or whatever, but they're not. They're actually buying it for food and shelter. And I think that's a really good example of when you move digital, you have a chance not only of saving money because you have less infrastructure and it's more immediate, so more money gets to people in need, including people in Vancouver, where we make donations, but as well, it allows you to track the usage of the money, which is really, really helpful for future donations.
And it's interesting because we've talked, clearly there were questions earlier about cyber terrorism or things like tracking and privacy issues, and these are all nascent and things to be considered in due course. But at the same time, it does allow a redirecting, and we've seen in the research that we've done that you have more opt-in than opt-out, because for many people who desperately need these services, it's a benefit, and there's a benefit to them sharing where services could or should be directed more efficiently from those organizations providing them. But it also begs the question, we still have the issue of affordable housing stock. So we started to look at that as well, and we had a broad range of participants, and this setup for social investment banking, this project, was a CIO of a very progressive bank, a real estate scion, and a kind of crazy media creative. And they did not walk into a bar, they walked into THNK. And as a result, they came out with this very interesting sort of mashup between crowdfunding, social impact bonds, and cooperative community developments that are starting to happen, all kind of proven financial models. We've heard many of them mentioned over the past day and a half. But the idea was, how do we increase the effectiveness of social impact bonds? How do we allow more people to drive their money directly into their neighborhoods so that we can aggregate people who are interested in building up the places where they live while still allowing financial institutions to play? So I'll let Mukhtar talk a little bit about this, because this is going to be going into a pilot, hopefully, with one of the city's projects related to affordable housing.
Yeah, I mean, in terms of social impact bonds, we need two things. One is an investor who's willing to accept a lower return in return for a social benefit. And the other thing is, generally the social impact bonds that we've seen in Canada and some other countries is where the government underwrites that financial return in terms of the saving that it makes in the services that it's providing by the projects that are being delivered. What we saw with this kind of model is the fact that you've actually got the local communities engaging and investing in those bonds, because it is going to have an impact in their neighborhood and delivers a need that they see, which is affordable housing. And what we were looking at was an opportunity. We've created over the last 5 years 10,000 affordable homes, which is a range of housing which has some government funding, so it's very low income, but the majority of that is secured market rental, 6,500 units, of which 2,500 units we've managed to deliver in areas where local populations weren't really wanting high densification. So this is more of a gentle densification by allowing secondary suites and laneway houses, which is houses that they build at the back of their lot. And what we were looking at is an opportunity where the homeowner who cannot fund the construction of these laneway housing is to partner up with an organization such as this to fund a new housing project, which would be rented at a lower cost, because there'll be an arrangement because of the fact that they're not funding the actual construction costs. And then that could be leased for 15, 20 years until the payback period is being delivered. And you've created a new affordable housing unit funded by the community, with no government intervention in that scenario. And that's one of the things that I think we wanted to see, is really encourage the community, the neighborhood, the city, to work with this, the council and senior levels of government, and as I said, really find innovative solutions about how we achieve the greater good.
Yeah, and I think we heard quite a lot of that. We went on the tour of downtown Richmond yesterday, and there was a lot of discussion about what is the role of kind of the municipal, the people working on those front lines, and where is the community's lever in terms of how they can play in the space. So as more people, Christine, are starting to engage in digital finance online, we've all heard about Kickstarter and the power of the crowd there, but with something like this where you start to open up more investment, what are some of the trends we should be looking for as more people join the financial tech scene?
Well, I think for housing, it's an area where crowdfunding and housing hasn't really heated up as much as you think that it might. But I think one of the cool areas that we'll see is developments like this will be crowdfunded. And I think that's kind of exciting, because people can vote with their dollars that they believe in this project and want to support it. And I think Vancouver is a great place, not just because I live there, but because it's a pretty cool place where lots of innovation is happening, lots of financial innovation is happening. So it's a great place to kind of take a project like this and crowdfund it, and actually bring crowdfunding to a different concept, which is housing and crowdfunding on a municipal level.
Mm-hmm. Well, on that note as well, because it's never enough just to create housing stock and to invite more people to be part of it, but how do we make that green? One of the other teams, and you can see that all the teams, based on their research and their sensing and good design thinking practices, decided to focus on different drivers. And this particular team was headed up by Pamela Pachalski, who's just been named the head of the Resilient Communities program at New America. She is really interested in this kind of community level. How do you make accessible to people who are renting and not going to invest in upgrades that would retrofit or increase efficiency of these houses? How do we start to create more of this in the stock that's available? And they came up with this idea called HomeGrade, which was essentially a property management company specializing in efficiency upgrades, allowing owners and renters to reduce costs and an opportunity for earned equity. So here they kind of looped back to this idea of using a digital system where over time, even as a renter, by being a part of this system, you could help fund the efficiency upgrades, take the savings and reinvest those into equity that grows as you travel between properties. So this introduces a lot of really interesting questions. Again, we're hoping to be able to run a pilot with this either through New America or some other partner. But the question is, how would this impact the city's affordable housing stock, knowing that many of the SROs and older buildings, they simply can't afford at the moment to be upgraded? How might this kind of thing help with the Greenest City Action Plan?
Yeah, what's been fantastic about these ideas is that once you start developing them, you get traction and new ideas that add to these opportunities. And what I saw with this one particularly is that we have about 100,000 rental units in Vancouver. Most of those were built in the 70s and 80s and are really aging now. And we had seen a big impact as now developers are buying those up and redeveloping those. And the new rents are potentially 50% higher than the existing rents because there is a rent cap facility in British Columbia that we work with. So what we saw this kind of product doing is working with existing landlords who normally tend to be one property owners, so they don't really have the resources and the capacity to be able to do this. So if there's a company that can enable the interaction between the city, secure funding from utilities or even carbon tax credits and other opportunities to be able to raise funding, that allows people to then upgrade their buildings, and the renters can then share some of those cost savings in terms of the reduction in heat costs and the obviously the reduction in the carbon footprint, which is part of the greener city agenda that we're trying to achieve within Vancouver.
Thank you, Mukhtar. I'm going to let Christine have the last word as I see Gordon creeping closer. But it's such an interesting topic, and we had many, many explorations of the value of data coming out of the housing. So as we start to see smart metering become more pervasive, we can see people living in these houses use that data as leverageable value. So I just wondered, Christine, as people think about digital finance and digital currencies, what are the things we absolutely should pay attention to? We have a room full of decision makers shaping our cities. What must we pay attention to in the next 5 years?
For me, it would be the blockchain, which people kind of have ignored the last 2 years, but is fundamentally important to something like Bitcoin and other digital currencies. And it's because, as part of this conference, the underpinning of it is that we're moving into, connected cities and smart cities. And so as we all get connected with the Internet of Everything, what we're forgetting is that there's a payment part of that. So as you drive into the city and pay a toll or park or pay for heating, whatever it is that your municipal costs are going to be as a payment, and those are micro payments. And it doesn't make any sense to move into the banking system as you connect a city digitally and adopt the legacy and old-fashioned banking system infrastructure. Sorry for the banks that are here, but the truth is it makes much more sense to keep it machine to machine, and machine to machine means something like the blockchain, where you'll be saving billions. So my pitch for Vancouver and for cities is, be smarter, save your tax dollars of your taxpayers, and think about something like the blockchain in the next generation, incorporate millennials and more clever, streamlined thinking. And that would be my advice is, let's just keep it digital, let's keep the fintech going, and let's do something different that is much more intuitive and innovative.
All right, on that, thank you so much. Thank you for your time. Thank you, Christine and Mukhtar.